Hi everyone, good morning. Today I just want to introduce the subject called financial analysis. Under that, actually there are four modules. So first module is about markets and instruments. From first module, majorly there are three concepts. So first concept is this only: organization and functioning of securities market. Second one is about marketing indexes. Third one is market efficiency. So in this session, I am going to discuss about the first topic under this concept, that is organization and functioning of securities market. So under this we are going to study characteristics of financial system, financial intermediaries, and functions of the financial system. By the way, my name is K. Kiran Kumar, Faculty of Commerce, Krishna Jayanti College, Autonomous, Bangalore. Let's start the session. So first we should understand the meaning of financial systems. Already in our second semester, you study about the financial services and institutions. There you understand the meaning of financial system. So very simple, financial system is the place for obtaining funds or saving or depositing money. But the main function of the financial system is linkaging between savers and borrowers, or else connecting between savers and borrowers. So here the financial system refers to set of complex and interconnected components. That means financial system containing four important instrument components. One is financial institutions, under that specialized and non-specialized financial institutions. Next, financial markets, financial instruments, and financial services. Through these four components, our Indian financial system maintaining and facilitating the flow of money in the economy. So finally, what we are trying to understand, the meaning of financial system: it is a system to facilitate or circulating funds efficiently in an economy. That's it. Now, first one is characteristics. So through characteristics, we can understand the importance of financial systems. So investors can save for the future at fair rates of returns. Generally, why investors start savings or start investing? Only for their future, maybe for their children's, to their parents, or for their future purpose. Okay, so if any investor plan to invest, means the person should go through financial system only. Next, credit worthy borrowers can obtain funds. So whoever plan to borrow funds for starting a business, or whoever want to obtain the funds by issue of different securities, they should go through the financial system only. So whoever worthy and whoever having a credit worthiness, then they can borrow money from the from the capital markets. Hedgers can manage their risk. Of course, even a financial system is a place for minimizing risk. That means where funds are available at a cheaper cost, then investors or companies used to go there only, or else companies can issue the securities with a lesser price, or maybe for minimizing or managing risk point of view, investors can choose any kind of instruments. So it is a place for hedging also. Traders can obtain the currencies, commodities, and other assets they need. Okay, so traders also can do through forex market, commodities market, when as they want. Now, coming to the second one, financial intermediaries. In a big financial system, there are a many number of members playing as a intermediaries between the investors and company or between the two members. Okay, intermediaries actually plays a vital role in Indian financial system. Let's see first one, organized trading venues including exchanges, brokerages, and alternative trading systems. So, organized trading venues point of view, there are some recognized, okay, organized, well organized uh, places or activities or else persons can act as a mediators. Let us take example exchange. Exchange is a mediator between the two persons, seller and buyer. The broker will act on behalf of the investors, buying and selling the securities on behalf of the investor. And alternative trading systems supply liquidity, securitize assets so that borrowers can obtain funds inexpensively, manage banks that use depositor capital to fund borrowers, managing banks, manage insurance firms that pool unrelated risk. As you know that the main function of the insurances are just to pool money from the public by offering the different products, and whatever they collected money from the public they may invest into other securities for generating profits. That means insurance companies are also act as a mediator. Manage investment advisory services that assist investors with asset management inexpensively. So advisory services are also can avail. Provide clearing houses that settle traders. So in the first point there we discuss about exchanges. So for clearing transactions it takes 3 days. So anyway stock exchanges are acting as an intermediary between the two parties, buyer and seller. But for clearing transactions it takes place. So clearing transactions are also acting as a mediator like NSDL and CSDL in India. Examples for clearing houses. Next, manage depositories that provide for asset safety. So these are the persons who act as the mediators in the financial system. Next, coming to the last concept from the first lecture, that is functions of the financial system. So financial system do a lot of functions. So first important functions, as I already told you in the beginning of my lecture, that is linkage between savers and borrowers. So allow entities to save and borrow money. This is the first function. Financial system only allows the members who want to save, allow the members who want to borrow, who want to obtain money. So generally these savers, investors, borrowers, they can use all these kind of services in financial system only. Next, raise equity capital. So if a company planning to raise a capital through issue of shares, they should go through the Indian financial system. Managing risk, that is hedging risk, minimizing risk. Generally, how to minimize the risk? Very simple, just to diversifying the funds into the different securities or assets. This is called as hedging technique. Next, trade assets currently or in the future. So selling and buying of assets, and trade based on their estimates of assets value. Generally, if anybody want plan to sell or borrow the assets, they will see the market condition and demand. Whenever there is a demand, sellers are ready to sell, and whenever there is a low demand, buyers are ready to buy the any kind of asset. So all these things are actually done under the financial system only. Next one, determine the returns that equate the total supply of savings with the total demand for borrowing. Very simple. Let us take example. Suppose if I borrow 1 lakh rupees at 10% interest. So 10% on 1 lakh, how much? 10,000. So whenever I am going to invest invest or utilize this 1 lakh rupees, wherever I am going to earn the profits, this profit should be more than my interest rate. That means my profits or returns should be equal or more than the interest where I borrowed, that is 10%. So as per my example, what should be the returns here? It should be more than 10% return, so that only I can manage. So to understanding like this, or to utilize the resources in an efficient manner, this financial system only helps to the investor to either to go for own funds or either to go for borrow funds. And last one is allocate capital to its most efficient uses. Once if a company obtaining funds, or if anybody having a efficient funds, they can also decide or allocate or utilize the sources